Let's move on now as NASDAQ continues to lead the market higher. Which names might be ready to cool off and which ones really haven't joined the rally just yet? Christina Partsinevelos looking at the overbought and the oversold. Christina.
Well, Tyler, if you want to be different and all our retail investors watching, then you might consider avoiding Tesla, as it's the most overbought stock on Wall Street right now. The technical metric, which is often talked about on CNBC as RSI, the Relative Strength Index, measures the speed and magnitude of recent price moves. So if an RSI is above 70, it's considered overbought. If it's below 30, it's oversold. So you want to be between that 30-70 range. More importantly, though, it can indicate a security may be ready for a reversal in price. And that's what we talk about.
Tesla shares have experienced significant growth, rising over 100% year to date. This surge has led analysts to re-evaluate their price targets, with many revising them upward as investors continue to bet on the company. With a lot of investors consistently keeping themselves up to date with what analysts have to say, it is crucial to continue to be well informed about the market and learn every fundamental about your investment to not miss out on those sweet gains. But what are the factors that influence the change in their price targets? Welcome to Prima Invest.
Or maybe it's also the broad electrification of the vehicle fleet, perhaps, Kevin Green, maybe that keeps a lid on crude as folks often prognosticated it would when we got to the EV world. And we're pretty much here. Tesla's big charging station teamwork with Ford and GM was pretty good for the stock last week. What are we thinking about this week as we're pushing 250 in the shares? First time in a while we've been up here.
Yeah, well, we saw a fair amount of tailwinds for the company over the last couple of weeks, not only seeing the tax credits also being offered for that Model 3 and Model Y, but also having the expansion of that charging center business to Ford and GM. I think both of those are catalysts to the upside here for Tesla. But you're right. If you look at a chart, we actually do see a gap down, pretty significant resistance level at the $254, $255 level. So just keep your eye on that as we continue to move higher in this name. But we do have KGI Securities upgrading Tesla to an outperform from neutral with a price target of $335 per share. They are seeing that the U.S. investments that Tesla has made over the last couple of years are starting to bear fruit. In 2023, they also believe that they are going to be one of the biggest beneficiaries of the Inflation Reduction Act.
Tesla's stock has been experiencing a significant surge, with a year-to-date increase of over 100%. This remarkable growth has led analysts to quickly reassess their 12-month price targets for the stock, with many revising their targets upwards due to strong investor confidence in the automaker. Evaluating critical factors that could impact Tesla's long-term growth is crucial to ensuring the security of investments in this rapidly expanding company. By carefully considering these factors, Tesla investors can have confidence in the future prospects of the company and its potential for continued success. According to experts in the stock market, Tesla's expansion has been highly impressive, with their bold investments in the electric vehicle sector yielding significant returns. The company's extensive network of fast charging stations, coupled with advancements in manufacturing and battery technologies, is proving to be successful. Recent collaborations between Tesla, Ford, and GM further emphasize the growing acceptance of Tesla's charging infrastructure as the standard. This development has become impossible for the US government to overlook, highlighting the increasing ubiquity of Tesla solutions in the electric vehicle industry. Investors are carefully assessing Tesla's leading role in the electric vehicle market, taking into account various factors such as production capacity, sales performance, and market share. Additionally, they consider the company's competitive strengths, which include technological innovations, strong brand recognition, and effective leadership by Elon Musk. The recent collaborations between Tesla, Ford, and GM have sparked interest among other private charging operators like Tritium and EVgo, who are now looking to join the expanding charging network and incorporate the widely adopted North American charging standard. These developments underscore Tesla's growing influence and the increasing acceptance of its charging infrastructure within the industry. Wall Street analysts are now considering Tesla's supercharger business more favorably, thanks to the widespread adoption of the North American Charging Standard, or NACS, by General Motors and Ford, which enables their vehicles to utilize Tesla's supercharger network. analysts predict that Tesla's charging business could generate billions of dollars in annual revenue by the end of the decade. The growing revenue potential from the supercharger network not only underscores the viability of Tesla's charging approach, but also validates the company's commitment to innovation. Tesla's continuous advancements in battery technology, autonomous driving, and energy solutions have propelled it ahead of its competitors and positioned the company as a disruptive force in traditional industries. Tesla's dominant position in the electric vehicle market, driven by its innovation and rapid growth, has resulted in a higher valuation compared to traditional automakers. Currently, Tesla's price-to-sales ratio is highly favorable, reaching its most attractive level since the start of the post-pandemic recovery on Wall Street. In the past, when the PS ratio was similar to its current state, Tesla shares experienced a sevenfold increase over subsequent months. Despite facing skepticism, Tesla has successfully transitioned from catering to affluent buyers with niche products to producing affordable electric cars for the mass market. This transformation has led to a remarkable surge in share prices, surpassing a growth rate of over 12,000%. While the stock may not be at its peak performance currently, it remains an appealing investment option for those seeking to invest in a valuable company. Analysts are optimistic about Tesla's prospects in the long run, as they believe the company's value proposition remains strong. They also anticipate that Tesla's pricing strategies for its vehicles will continue to evolve, taking into account various factors that may influence pricing trends both upward and downward. While Tesla is willing to sacrifice some of its automotive business margin in order to invest and expand, it does so from a position of strength relative to its competitors. However, it is important for investors to recognize and understand the inherent risks and volatility associated with investing in Tesla, as well as any other stock. These risks include market fluctuations, competitive pressures, and challenges within the supply chain. To navigate these risks, it is crucial to evaluate Tesla's risk management strategies, such as diversification efforts, capital allocation decisions, and contingency plans designed to mitigate potential risk and ensure long-term success. Investors who choose to invest in Tesla can potentially reap significant rewards if they carefully assess the risks and rewards associated with the company. By thoroughly evaluating Tesla's market position, financial performance, technological advancements, and environmental impact, investors can make well-informed decisions that align with their financial goals and personal values. Taking these factors into consideration allows investors to make strategic choices and capitalize on the potential opportunities presented by this leading automaker. In conclusion, Tesla's remarkable growth and increasing market dominance have prompted analysts to reevaluate their price targets and project a positive outlook for the company. The widespread adoption of Tesla's charging infrastructure, exemplified by collaborations with major automakers, validates the company's approach and solidifies its position as an industry leader. The potential for significant revenue generation from the supercharger network further emphasizes Tesla's innovative prowess and disruptive potential. With a higher valuation than traditional automakers and a history of substantial stock price appreciation, Tesla continues to attract investors who recognize its value and long-term growth prospects. However, it is important for investors to acknowledge the associated risks and volatility, considering factors such as market fluctuations, competition, and supply chain challenges. By carefully assessing these aspects and understanding Tesla's risk management strategies, investors can confidently make informed investment decisions aligned with their financial goals. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel. And as always, have a good one.